Welcome, everyone. Thank you for joining us today.
Thanks for having me.
And thanks, Mike, for joining. So this is, for those who don't know, this is the first FundersClub live event hosted on Facebook Live. We've done events like this before offline around the world, actually, with people from the venture capital community, from the startup community, and from the tech ecosystem at large. And our goal here today is to try to get behind the curtain of venture capital and bring some inside stories out there. And so I wanted to thank everyone here who's joining us. This is a live event. It's also being recorded. So good afternoon to everyone or good evening to folks in the Americas, and good night, good evening to the folks in Europe and Africa and Asia. So really it is an international audience. I went online briefly earlier today, and I saw there's roughly a third of the audience, for example, are women, and we have people from, like I said, all over the world. So this is definitely turning out to be something like what we were hoping for, to reach a much bigger group of people.
Great.
And so this is definitely something of an experiment. Facebook Live launched, I think, about 2 months ago, and in fact, Mark Zuckerberg at Facebook did the first live Q&A for the Facebook community itself just yesterday. So we'll see if this works out. I think Forbes put out an article about this very event today happening here, just commenting on this being a new thing. We have a couple people behind the scenes channeling your questions in the audience back to us. So please do ask questions. You can post them as comments directly below the video, and we'll try to surface them to Mike here today. And so without further ado, wanted to flip over to Mike and introduce him. And since Mike is very humble, he probably won't brag about himself, so I wanted to share a few points, a little bit about Mike's background. So Mike, of course, is a general partner at Kleiner Perkins. Previously was VP engineering at Twitter, widely credited for getting rid of the so-called fail whale. Basically, Twitter was seeing tremendous growth, and
the team did it, but
sure, leading the team to I think over 5x grow the number of daily tweets to almost quarter billion or over a quarter billion a day there at Twitter, and previous to that, general manager at Microsoft for I think .NET, which turned into Azure, as well as a leading role at Palm for WebOS, and actually an entrepreneur as well. And I think that's one of the things that makes Mike so great is actually that depth and breadth of background. So as a engineering leader, as a entrepreneur, and as a investor, startup investor.
Thanks.
Yeah. So I'm going to start off with some questions that I had prepared and thought about, and then we'll go over to audience questions. And I think a less well-known fact about you, Mike, is that you actually, as an undergrad, got a bachelor's degree in biochemistry. And actually,
isn't that the normal degree?
Had to get into BC, get a degree in biochem. Yeah. So, and then we're even pursuing your PhD in bioinformatics. So how did you go from that to starting? I think it was Composite Software.
I'll help you out a little bit on that. I actually 4 generations Bay Area, and my grandfather taught engineering at Cal. My dad's an engineer, so I grew up around computers. My introduction to writing software was on the Apple II Plus, and even in my elementary school, there were a lot of computers, and so that was normal. Clearly, that's not entirely normal. I got more interested though in molecular biology and some of the advances around just genetics in high school. And so that's what kind of led me to consider, is there an opportunity to do something novel in science? And as I was doing my undergrad, I kept coming back to computing, which is why I went up to the University of Washington to look at, is there opportunities at the intersection of computing and biochemistry? But after about 2 years, I wasn't sure I wanted to be a professor, and a friend of mine had gotten a grant at SRI to start a company, and he talked me into taking a leave of absence, and that was my foray into entrepreneurship. And that was actually not taking any venture capital, but just writing grants, which for us, frankly, ended up not entirely great. It was like one too many PhD dropouts and PhDs.
Got it. Okay. And so from there, my understanding is Composite Software was actually quite successful in the end, sort of ultimately acquired by Cisco for $200 million. How did you have the wherewithal to do that. I mean,
Yeah.
like it's not,
Well, let me give you the company before Composite, because I saw like an incredible disaster, which I think certainly informed both how Composite was built, and frankly, one of the things that contributes with how I even work with the founders I get to engage with. So I was involved with a company that at day zero, 99, we had $16 million because one of the co-founders had taken a company public called US Web. Mm-hmm. And then in March of 2000, we raised another $70 million, okay, at the peak. Wow. And then I found myself a year later having to lay off 180 people at a 220 and being the last executive to sell the company in the summer of 2001 because we still had $50 million in the bank. Being 20-something, it was an incredibly humbling, hard experience. And so certainly as in 2002, as we did the Series A for Composite, like all that was my introduction was actually kind of a disaster to founding companies. But I think it's important, startups are hard, as many of you know, and I think you learn a lot when something doesn't work.
Got it. And so like kind of what caused you then to transition back into maybe like larger technology companies?
Yeah.
Because I feel like more often than not, I hear about entrepreneurs who actually leave a Google or a Facebook or a large like a Microsoft or an Apple to go into entrepreneurship. I think your career trajectory kind of went back into the larger companies.
I tend to do that. Like it kind of everyone goes this direction, I go the other direction. It was in 2006, and I had decided. I had actually a year or two before. I brought in a CEO to replace myself, and I became the CTO. And candidly, I got really frustrated in that situation, and at the same time, there was a rise in a lot of the customers that we had at Composite in the financial services world around cloud computing. And I felt like there were probably two places I could do that then, and one was either Microsoft or Google. So I actually went up to Microsoft initially as an individual contributor, wrote one of their DHTs, and then after shipping that, was asked to become the first general manager of the effort that led into building Azure. But very quickly discovered that the company, I didn't think, had real conviction behind that, and was recruited at that same time to go lead the team to design and build WebOS on the mobile side. And I had never done anything in mobile or consumer. It was totally brand new for me.
Got it. Okay. And just continue this arc to where you are today. Just from there to venture, what was the aha moment for you to say, like, hey, actually, this is where I want to be? Like,
there was definitely not when I was like 18 thinking like, I didn't even think I knew what venture capital was. One of the contributors for me to going to venture, very candidly, was seeing both good, but frankly even more bad behavior by investors when I was an entrepreneur. Either companies that did not finance me or boards, and actually the person I would credit for really encouraging me to consider it was Rajiv Motwani. Rajiv was a professor at Stanford. He happened to actually be Sergey's advisor. He invested in Composite. But I think more importantly for me, demonstrated that you could be an investor and actually be helpful.
Sure.
He got me subsequently into advising and doing angel investing. And I thought, like there needs to be more people on that side of the table that actually can empathize with what founders actually go through. Because as many of you probably are dealing with now, it's a very lonely, hard thing to do. It's not glamorous to go be a founder and CEO. So that's the kind of the spirit by which I try to engage with the companies I work with.
Got it. Okay. And just flash forwarding to where you're at today at Kleiner, are there any particular areas that you've chosen to focus on in terms of companies that you're seeking out, or already working with?
Well, certainly I spend most of my time on the enterprise side, just by the nature of my background, especially on the engineering side. So I spend probably 3/4 of my time focusing on meeting great people there and investing in them. I'm not the type of person to go sit in some dark room and come up with 6 theses that I'm going to go try to find. I think there's trends that I believe in. I think there's things that I believe the world's actually going to, but ultimately, so much of Series A and venture investing, which is what I focus on, is our bets on people. And either this person or team, will they be able to filter the right feedback from customers, regardless if that's enterprise or consumers, and either put some of those things into the product or ignore those. And so, there's areas I'm interested in, like machine learning and AI and some of the advances in convolutional neural nets, but it all starts with a person, because I can't project a vision onto someone, and I would not want to ever do that.
And so at what stage are you looking to get involved with an entrepreneur? Do you develop early relationships when they're still at the idea stage, when they're already out there with a working product or service, or at some other point in time?
The spectrum. I mean, there's certainly a number of folks I've had the chance to work with who do go start companies, and they may be too early for us because we don't tend to really do a lot of seed investing. And so I might introduce them to other seed investors. I mean, there's a number of companies, candidly, out of Twitter right now that fall into that category. Typically, if it's on the enterprise or B2B side, maybe have like a 1.0 product, maybe there's some pilots going, it's still very early, maybe there's some revenue, but more importantly, I feel like they're providing a painkiller versus a vitamin to some real business need.
Sure.
Having sold in the companies, if you have a product where you've had to deal with the procurement process at a larger company, then like you're doing something right.
Can you? I think some in our audience might not immediately know what you mean by like painkiller versus vitamin, but I think in venture and in startups, it's a very like salient point. Could you explain?
Sure. So, in most companies of any size, there's a procurement team that, like, for different amounts of money, you have to have different approvals. And it's easy to, not easy, but you can go get pilots or proof of concepts where people don't pay because they're willing to try out your product and see how it works or not. But if the company perceives that you're solving potentially a real pain, a must-have versus a nice-to-have, I found that people are willing to pay something for that pilot. And as I tell entrepreneurs, it's actually not that important about how much they're paying you, but if they pay you something greater than zero, not only will that validate that, but also you'll get, frankly, better product feedback because they've actually gone through the pain of dealing with their own procurement team. And so they're more likely to have a vested interest to help you succeed.
Sure. So maybe we could use this as a segue to almost a completely different part of the spectrum of companies. So going to the consumer side.
Mm-hmm. Yep, different.
Very different. My understanding is you led Kleiner's investment in Snapchat, for example, and they've of course had a phenomenal story. And
fortunately later than I would have liked, but Evan is phenomenal. I mean, I think as a product person.
And so there, I mean, you're not actually looking at how much are individual consumers paying Snapchat, right? It was something else. So what was the thesis or idea around backing Evan and the team there at Snapchat?
So. I tend to, on the consumer investments that I've done, which is a handful, like Mob Crush and Plex, they tend to have some set of metrics or kind of quantitative data where you can see some kind of very, we'll say, rapid organic growth, depending on the product. Okay, so there is more data there. But I think it can still also, even in those scenarios, comes back to the founder. And it's been amazing to me to watch Evan between when we invested in today, like the number of new products that have come out. And he's killed older products. I mean, it's just a real testament to him.
Sure. Cannibalize yourself and
exactly, and it's easy for us to talk about, but to do it is takes a lot of intestinal fortitude.
Right.
And I really admire that.
Sure. All right, so maybe now would be a great time to flip the tables and sort of go direct to audience questions. You probably can't see this on camera, but off camera I have a live feed of questions coming in from all around the world. We have about 15 minutes, so plenty of time to dive into some good stuff. So let's see what we got here. So question from Dan Curran, who's an angel investor. And so this is, the audience I think we have assembled today is quite diverse, from people just interested in tech to actual entrepreneurs to VCs to angel investors. This one's an angel investor asking about, as an angel who may not have the ability to influence terms and sort of is maybe a potentially smaller check, but still really wants to support the company in some way. What is the, most important thing that a angel investor can do to improve their returns? So thinking about it as a financial undertaking for somebody who wants to support early entrepreneurship, what's the one thing that they might be able to do? I hope I did your question justice, Dan.
Yeah, I will try my best to answer. I'm just reflecting on when I was an angel investor and invested in companies like Hearsay Labs or Cloudera and others. It still comes back to the people. I happen to know one of the founders, like in the case of Hearsay Lab, I'd worked with Steve at Microsoft. I got to know Jeff really well at Kleiner when he was at Facebook. But in terms of improving returns, I think it's actually probably no different maybe than for us, which is I think there's two big axes that venture firms at the firm level can help with. One is recruiting, and then the other is partnerships or potential business development opportunities. And I think beyond that, from a firm perspective, it comes down to the individual partner and what he or she kind of brings to the table to help that entrepreneur or founder have an unfair advantage. Mm-hmm. And I think that actually is no different in the angel realm versus frankly, a firm like ours. Now, obviously, we have more resources than one individual, but if you have a network of people, of engineers or designers that you can help that company get access to, that's going to increase your probability of actually getting a better return, right? Because you're de-risking the business.
Right. Got it. Cool. Okay, here's an interesting one. What are your thoughts? This is from DM Suja. What are your thoughts on blockchain technology like Bitcoin and the DAO project from Ethereum?
Mm-hmm. So spent a lot of time looking at a number of blockchain and Bitcoin companies over the last year or two. And while I said before we don't have a concentrated focus on seed, a gentleman and I started something called KP Edge about a year and a half ago, which we basically write checks of no bigger than 100K in basically 5 different technology areas that we feel have maybe longer lead times, and blockchain is one of them. So Bitcoin, my own view there is if we were going to go invest in a Bitcoin company, it may make sense for us just to buy Bitcoin because most of those likely tend to be an index.
Sure.
But I do think actually as a distributed ledger technology, blockchain is really quite interesting. And we have actually done investments in companies like Align Commerce that are using, that happens to be an implementation detail for delivering a solution to the end customer.
Sure. The ledger.
Yeah.
And what about the DAO aspect of that question? I think it's for me too. I'm actually very fascinated by that. Are you familiar?
I'm not as familiar, so I'm pretty comfortable knowing what I don't know. I'm not even going to try to answer something I don't know.
That's fine. So. We'll skip over that for now. This is interesting. Are there particular companies that you're most excited about right now, specifically in computing and infrastructure? So this is from Greg.
That's a broad question.
Pretty broad question. Yeah.
I mean, this morning I was before this I spoke to a group of CIOs in the South Bay from a bunch of Fortune 100 defense companies. Okay, and what's interesting is even there you're seeing kind of this fascination around the rise of microservices and containers, and there's this kind of, not surprisingly, demand or desire to move faster. But part of the driver behind that is not just actually having those teams move faster. They're realizing they have to actually change how a lot of these companies build software to be able to attract and retain talent. Right? I mean, if you're a new grad and you go join a company and you're not shipping anything, it's unlikely you're going to stay very long.
Sure.
And even the Fortune 100 companies are realizing this. So I think the implications of that around just infrastructure containers, the next thing beyond virtualization, full disclosure, I'm an investor in CoreOS, so I'm biased with this comment, but I certainly believe in that overall trend.
Got it. Cool. All right, let's see. How do we go? So this is from Ian, asking about sort of an industry question. The VC markets have been undergoing a correction since Q4 of 2015. How do you think it will play out? It's kind of not a small question. How do you think it will play out? And what advice would you give entrepreneurs who are building a company in the current fundraising environment?
So I think I would push back on the correction comment.
Yeah, feel free to push back.
Yeah. Only because, at least for the areas that I tend to focus on in the earliest stages, I mean, we're still financing companies. Good companies are still being financed. And I can point to a number of those. I do think that potentially for some of these companies that have raised over the last year or two at maybe high valuations, that may be challenging because if there's an area that maybe there's been some more rationalization, it's probably been there.
Sure.
But I think at the very core, though, if you're building a product that people love, regardless if it's a consumer or enterprise space, you will find someone that will find a financial company.
Sure.
I think if anything, it will be healthy as I think we see kind of hopefully less dollars go into a lot of these very, very early seed stage companies, only because a worry that I always had is that there's a large diffusion of talent to a lot of these efforts, where if we had more concentration, that might actually create some more interesting companies. But
So
we'll see
there's
with time.
potentially
Yeah.
there might have been a little too much capital going to perhaps pursuits that shouldn't have been funded. And
Potentially. I mean, history would say that's happened before.
Yeah, yeah. And the first thing, actually, we did it, this is a little offhand comment, but we did some analysis of the market and showed time and again over the last 20 plus years of venture, whether it's an up market or a down market, obviously like opportunity and creative destruction doesn't pause, right? And so you had Airbnb, Uber, et cetera, being started in 08, I think, 09, and so, which was, of course, the right in the heat of the recession. Cool. So I think we already asked some of these questions. So I'm trying to find a fresh one here. So somebody had a question here. Alex was asking, Kleiner, KPCB Edge is building tools and products to support its portfolio companies. Can you elaborate? Why would a VC firm build such tools, and what areas are you looking to building product for next?
Sure. Yeah. So as I said, I think if you look at the software efforts that started at KP, guys still write software, and we worked on building some software a couple of years ago just to help us to try to identify these fast-rising second derivative consumer companies. And then as an experiment, candidly, because I'm a big fan of like experimenting things, is like, hey, like there's some technologies that may have longer lead times than we have a company today to go finance in, but we want to go and augment our network in those areas. So Edge really spends, and there's 3 or 4 folks there, half their time writing software, and the other half actually finding these entrepreneurs in these kind of 5 technology areas. So the software that we built really kind of focuses in 3 areas. One is software for the firm, right? To give us either a better way to engage with our customers, entrepreneurs, identify these companies. The second is our tools that our entrepreneurs can get access to, right? You want to get an introduction to Pepsi, like how do you find that within a firm? Typically how historically that's been has been through email, like very inefficient process to basically leverage a network where in our case has been built over 44 years. And then the last area is, are there software that we can offer for future entrepreneurs that we should be backing? I tend to believe that over time there's going to be more and more, we'll say, engineers and designers that work at venture firms and actually try to address, I mean, venture doesn't scale, but there's aspects of the business, let's say, especially on introductions, that actually can scale, I think, through software.
Right. And actually, out of curiosity, have you guys started funding companies out of Edge that have been serviced through that funnel? That's very cool. Cool. So let's see. Question from, this is interesting. This is another sort of angel investor facing question from Mark asking, what is the right way to go about coming up with a valuation for an early stage startup?
Well, there's this really fancy equation. It's purely art, right? So I do think that one of the things I've seen, this didn't happen in the Bay Area as much as in other areas, where I think you have to recognize the fact that if you give up too much ownership, especially in your seed, like over time, like this movie will not play out well. And so I think you do have to be thoughtful. Can you give some color to that? Like why? Why does it play out well? I won't name the company, but like there's one company that I had to help resolve this issue where, green entrepreneur, maybe a little bit out negotiated, gave up too much of his company. So now we have to, and I feel really strongly that because this happened to me. So for me, this is like a topic that's like really near and dear to my heart, which is like, look, if in 4 years, only investors have a majority part of this company, like it doesn't end up well. So we can either acknowledge that fact and fix it now, right, or not. And that literally was a conversation I had with those seed investors. And so, my guidance on this is like, we have to be reasonable. Like I tend to, like a lot of the folks that come to me, let's say from Twitter or Palm or starting companies, I say, look, in a seed, don't give it more than 10 or 15%. Because you do kind of the math of like, the 20 to 25 in the A, and then like another 15 to 20 in the B, like where do you want to end up? Sure. Right?
Would you say it's fair to say, maybe as rough guidance to that kind of a question, is like be long-term greedy as opposed to short-term greedy?
That's exactly right.
Think about the future.
It's the same way, I'll never forget, this was in 2002, and granted, obviously I had to do a lot of meetings to do a Series A in the summer of 2002, and one particular general partner who was in the process of issuing a term sheet was trying to convince me that like having a really high valuation was a bad thing. And I'm like, yeah, right. Like this is a venture capitalist. Like, but actually, after spending an hour with him on it, I think that there's validity on having a valuation that's too high and there's a valuation that's too low. So I'm kind of making comments on too low. But I think we also really have conviction on the entrepreneurship of saying, hey, if I'm going to take this money, do I believe that I can truly grow into that valuation?
Sure. Got it. Okay. So it seems like we might have a signal issue. We're back online, so thank you for your
technology is so great.
Thank you for your patience out there. I think we are all part of a pretty grand experiment here with
is fun.
Facebook Live, which is pretty cool. So thank you for bearing with us. So let's go back to questions here. So I know you've been looking at like the enterprise. Question from Jonathan asking, what areas of business operations do you see opportunities for AI or ML to disrupt?
Yeah, so I'll give a couple kind of views on I think where the enterprise is going, and then we'll talk specifically about that. So
Sure.
What's this, 2016, so like 15 years ago, like there are applications like Siebel, right, for CRM. And then about 10 or so years later, well, not 10 or so years, a number of years later, Salesforce emerges, which on the kind of core is really hosted Siebel, in my opinion. And I'm curious of what's that next CRM application that's built from the ground up with mobile first and applying some of these advances in ML and AI. But very concretely,
I just realized we're using so many like TLAs, so maybe we should like maybe we break that down.
I'll be very specific to the answer. I think there's interesting opportunities in decision support and customer support with the advances in natural language processing and recursive neural nets for text processing. So people, there's been a lot of announcements recently of the bots, Facebook, Microsoft. But I think a very real use case today is, if you provide decision support over, let's say, a web chat window, arguably, probably 80% of that could be automated.
Sure.
And maybe just have the last 20% of that support.
Feature with AI, artificial intelligence, machine learning built in. Like, there's been a lot of talk about bots, and some people kind of dismiss it as like yet another chat bot. Do you see that as a sustainable part of the future? I know Facebook, for example, as a platform, has built-in messaging into its feature in a significant way, and do you see that going into the enterprise?
Yeah, I'm actually been applying more of a lens on the enterprise, saying like, what are the real problems that could be solved? And I do think that, end user support, like there's a reasonable use case. Maybe internal IT support, that's a reasonable use case. Both scenarios have humans that like predominantly answer similar questions in a pretty repeated way, and so maybe there's a way to automate that and make that easier. I think it remains to be seen on the consumer side around, will there be enough APIs that are exposed where you can actually, there's this like assumption that like, those are all going to be open.
Right.
And that's unlikely going to be the case because too many companies are going to be threatened of disintermediation if they open those APIs. So I don't know how that'll play out. As a consumer, I hope they do, but we'll see.
Sure. Okay. So maybe like last question here, wrapping up or coming up on time. What would you say is the biggest mistake that you see entrepreneurs make? You mentioned making mistakes yourself. The biggest mistake you see entrepreneurs making, both like as operators, so like running a company, and then also separately, since you are now on the investing side, that you've seen entrepreneurs make while in the fundraising mode, while fundraising. So, because I think those are two different questions. Yeah.
I think on the fundraising side, being thoughtful about who you think the right partner is at the firm. Does that make sense? And as much work as you can do to understand what he or she's invested in before. And then kind of tied to that is spending time with that partner. So nothing pains me more when I hear like a company, it's like, I got a term sheet that expires in 24 hours. And I always say, like, it's like exploding job offers. I remember I used to deal with this at like Twitter and say, like, look, guess what? The day later, you're still going to want to be hired. Like, and that's kind of the same in the other case. It's more important, especially when you're fundraising, that like you can't fire an investor. Like, both parties should want to spend some meaningful time together to make sure for the next, that you want to spend the next decade with this person.
Yep.
I think in terms of failure on the operating side, I don't call it a failure, but I think as you're growing, like the communication that works when you're 5 people in a room doesn't work when you're 15, doesn't work at 30, doesn't work at 50. probably obvious on paper, but usually it actually comes out in like really common ways. It's amazing. Like, and I've been very fortunate where I've gotten to see like building 6 engineering teams and 4 from 0, and now I get to see even more startups actually grow. And like the same issue happens at so many companies where, like, let's say at 25 people, if you don't have kind of a new communication mechanism or a little bit of structure organizationally, someone will come to you as a founder CEO and say, oh, you know what, like, this doesn't feel like a startup anymore. We're really big. And it has nothing to do with the fact that you're really big. You're 25 people. But it feels big because the communication's actually not occurring, right?
That was occurring naturally before.
Exactly. It was not as intentional because, hey, we were all in one room and I was just like, we're just sharing it over Slack or whatever, where now you might have to have a forum of like an all hands, or like you may have to carve out time to walk around and say like, hey, how are things going?
And so you're saying as entrepreneurs actually introduce those kinds of structural ways of facilitating communication, it actually makes the company feel smaller.
It does. And I'd say that's like one of the scaling challenges. You know, it's the same way that like at 30 or so, there's a challenge for any founder of like, now you have to really kind of force yourself to let go. Right? Because otherwise like your leadership team feels like they're being micromanaged and you don't want to let go. And if you don't, then you'll never grow outside of that. Right? And it's tough. It's a very hard thing to let go. Because it's your child.
Your baby. Yeah, very good insight. That's very, very, very valuable advice. So, well, I wanted to thank everyone out there
thank you for watching.
Participating. Thank you very much, Mike. This is wonderful, and we should probably wrap up the feed. So, thank you again, everyone. It was great. Yeah, bye bye.